Portions of the following program may be pre-recorded.
The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity. Prepare for your retirement. Safeguard your savings. And nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Good morning, and welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings investments in your retirement here on our show. Our show is all about building up wealth, understanding the world today, and plotting to build your retirement and to successfully transition through it. We talk about all these things every week on the Max Out Savings Show. It's actually one of Houston's longest-running financial shows. We also have a free newsletter. It's called the Max Out Savings Report. If you just want to copy that, just go to our website, maxoutsavings.com. It's completely free. We don't bother you or do anything. We just write about all this stuff. You can also listen to podcasts or go into the 1070 website as well to listen anytime. It's the Max Out Savings Show. Our motto and our philosophy is to save aggressively and invest conservatively. Save aggressively, invest conservatively. That's the key to building up wealth over the long term. And you do that. The best way to do it is to go in and with your company plan, put away a minimum of 10%. Plus the company match, and just let it build up over time. Look, at Max Out Savings Advisors, we don't manage 401ks. We talk about this always at the first of the show because this is how you build up wealth, or your 403Bs, your different types of programs. This is how you build up wealth is in these programs. Government gives you a tax deduction for putting the money in. Then it lets you grow for 25 or 30 years tax-free. And the only time you get taxed is when you take the money out. That's a heck of a deal. I don't know how many times I've said that. Look, Warren Buffett, if you study what Warren Buffett did, the number one thing he did was to try to avoid paying taxes. If the government gives you a program to do that. And so take advantage of it. And by the way, for 2024, one of there's a catch-up for people aged 60 to 63. If you really want to just sock away a lot of money coming into retirement, you can now put away, typically once you get over the age of 55, the age of 50, you can put in about $23,500. But if you're over the age of 50, you can put away $7,500, so it works out to be $31,000. But this year, between the age of 60 and 63, you can actually put away $34,700. So if you're between the age of 60 and 63, you can put away $11,250 more for retirement. This lets you build up your retirement. Most people don't have enough money to retire. It's important to do it. And there's two ways to get through retirement. You got to save a lot of money, and the other way to do it is you have to live a frugal lifestyle, and either one of those will get you through retirement. If you don't have enough, if you're age 60 and you don't have enough for retirement, you've got $200,000 or $300,000 for retirement, and that's it. The way you do that is you continue to work till age 70. Or whatever you can work to, but what you do is you figure out how to get your lifestyle down to a point where you can live within that budget. Now that's going to do two things for you as you're starting up. Like I said, let's say you decide to retire. Retirement age right now is 67 years old. Let's say you decide to retire for Social Security at 67, just for this example. Well, what you do is you've got 7 years to put as much money possible in. You're behind schedule. So what you do is you figure, how can I cut my costs as much as possible and live as frugally as possible to save money during that time frame? Now, that's going to do two things. Number one, when you hit retirement, you're going to need a lot less money to retire. And number two, it also lets you put more money and build up your savings plan at the same time. So if you're coming up on retirement, you don't have enough money, have a two-pronged approach. Don't just have a program to save more money, but have a program to reduce your expenses. If you can reduce your expenses, if you can live within your Social Security, have your bills paid off, and just use your savings just for oh no, I need a new car or something, kind of like emergency things once in a while, that'll also get you through retirement. So there's different ways to retire. There's different ways to do it, and you can live pretty frugally. I mean, honestly, it's almost ridiculous how much I really try to think I'm pretty frugal, but I look through the bills. I'm like, it's amazing how much money I could sit there and kind of waste. And so again, this is something to think about. If you're behind schedule, now's the time to start ramping up retirement. If at age 60, if you're like, look, I'm not going to make it, that's what you do. You start concentrating. You start paying off, making sure your house is paid off, make your benefits are as low as your living expenses are as low as possible, and frugal. And it's amazing what people live very nice lifestyles on a real reasonable amount of money. It's just extraordinary, some of the stupid things for expenses, So with our company, I'm not going to tell you how much we spend on internet access. For instance, between I need a lot of media for the radio show. I need backup and quadruple backup at different locations because to run the Max Out Savings investment advisory firm, and I always want to make sure we're connected to the internet, and then we run all these scenarios. If this happens, if that happens, we have different providers. We have satellite backup. We have a mobile satellite backup. I mean, it's just we really try to triple it out. But that's expensive. But most people don't have to do that, and so that's something to think about. So anyway, remember, save aggressively, invest conservatively, but also pay attention to those costs. Pay attention to your living expenses, how you can manage those overall, and so that's saving money, that's building up wealth. Remember that super catch up, you can put away $34,750 a year. So if you do that for 5 years, you're looking at you're putting away another $173,000. So let's just say, oh my gosh, I'm 60 years old. I've never saved enough for retirement. I only have $200,000. What am I going to do? The answer is real simple. You reduce your expenses. You max out $34,700. You basically reduce, just super save money, put away another $34,000. It gives you another $173,000 plus your $200,000. That puts you in pretty good shape. And so take charge of your retirement. Don't just freeze up. Make the decisions to improve your lifestyle. Now, lots of things, because remember, I just keep saying this, it always amazes me is retirement, people, years ago in the 1960s, I really wasn't managing money then, but people retired. They figured they had, look, I got 10, 15 years. Let's just park it in CDs or bonds, and, we'll just get through it. And that'll be, look, right now, you have, if you retire at the age of 65, you got probably close to 50% chance one of you lives to be 90. That's 25 years or more. And some of these things are 90. We have clients 90, 93, 94, 95, 96 years old. You look at 95. You look at it. That's 30 years. So you have a long time for retirement, and inflation and a lot of stuff can do a lot of damage to that. So anyway, take charge of that retirement. Now's the time to do it. It's the start of the new year. It's actually what is today? Today's February 1st. So it's still time to make those New Year's resolutions and get this done. A lot of stuff happening this week, as always. I want to cover a couple things with Trump. Again, we talked about Donald Trump. We're big fans of people know long. We thought Donald Trump was going to win before anybody thought he was going to have a chance. We said he was going to win. We get it. We understand it. And and Donald Trump, some of the things we're looking at what Donald Trump is now in office. A couple thoughts come up. I am really surprised how many people tell me, and I'm actually impressed myself, is, wow, he's doing what he said he was going to do. Can you believe he's doing what he said he would do? I mean, it's just really, that seems to be the surprise. People aren't saying, oh, look, he's sending people back to the border. Oh, he's doing that. They're saying, wow, he's doing what he said he was going to do. And the administration really seems to be very driven on America first in working for the people, which is really exciting. We're seeing a lot of things happening. Really, look, I really think that this is, I think to understand what's happening in the world today, I think we really have to look at the Cultural Revolution in China, where they had the Cultural Revolution and the communists were in charge. They were doing pretty well, and then all of a sudden they had this Cultural Revolution where we need to get rid of the elite class, kind of these Mandarin types, which were kind of like the white people today. We need to get rid of our culture. The same thing, we need to burn down the temples and get rid of the books and old Chinese pictures and everything, and the people. We need to erase our history. They kind of went through that period, and it just kept getting worse and worse and worse, and then it turned on itself, and eventually they came out of the Cultural Revolution. I mean, there was millions of people dying. They sent people back to farms, to make sure everyone was equal, and it was pretty much of a disaster. And then they couldn't feed anybody, and kind of the same thing today. Very, very similar. You want to tear down the statues of the great leaders of China, of Confucius or whoever, and you always hear us tear down the Thomas Jefferson statues. The same type of thing. And now we're coming out of that, and Donald Trump is. I mean, he's moving swiftly to really erase that. I mean, the idea that we were going to sit there and hire everybody based on a diversity. You want to get the best person for the job. Now maybe you go, hey, we'd like to have a more diverse group of people, so we're going to work real hard to try to find diverse candidates that qualify. That's a different story, but. We just had the plane crash this week. I had somebody tell me, that they can't retrain air traffic controllers at some union things. And I heard kind of a horror story, and I won't even use the city here in Texas where they have one of these people who are just completely incompetent. And they've had to have people almost sit with them all the time, but they can't do anything about it. And you start dumbing down. I mean, if you really want to understand diversity, equity, and inclusion, look at big cities in the United States of America. Every single big city in the United States of America run by Democrats, which is the crowning glory of diversity, equity, inclusion, is a failed state. Crime is out of control. The roads are falling apart. They're deeply in debt. Things don't work. There's payoff. There's corruption. You can't have that happen. So this is an overthrow of a complete regime, and they're having to go in there and fire a lot of workers. They're going to have to, a lot of these seniors, they have to be gone. You can't keep them around. I mean, they were engaged in law. They were engaged in enforcing the law based on a person's political beliefs. They wouldn't. Elon Musk has got a thing saying, they went into the Treasury and they said, well, how are you determining whether people are being fairly paid or not, or they're not like, ripping off the system or making stuff up? He goes, oh, no, we have to pay everybody. And he's like, what? Oh, yeah. He said, even as the terrorists, yes, sometimes we've even seen terrorists that are getting money, but there's nothing we can do about it. It is remarkable, the complete collapse of any type of logic in the government, and so that's changing. And I'm going to get back to this and understand it, because you have to understand how this is going to affect the markets. It's going to affect your retirement. It's going to affect everything. Right after this quick break, right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka is taking your calls now at 713-339-1070. Ted Gioka will return after these messages.
Hey everybody, Charlie Kirk here. Ted Gioka, the founder of Max Out Savings Advisors, always says, save aggressively and invest conservatively. He specializes in helping people grow their retirement account with as little risks as possible. Ted combines working knowledge with the intuition gained from over 25 years of experience of value investing in the stock and bond markets for retirement accounts. Like you, Ted is deeply conservative in life and in his investment approach. His risk strategy allows him to anticipate market downswings to protect your money. Ted is also the conservative host of the Max Out Savings Show. You can listen to him every Saturday morning at 10 a.m. right here on The Answer. If the idea of saving aggressively and investing conservatively appeals to you, the best way to get to know Ted is to call him. The number is 713-627-0400 or visit maxoutsavings.com. That is maxoutsavings.com. Call Ted right now, 713-627-0400 or visit maxoutsavings.com.
This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
Once again, here's your host for the Max Out Savings Show, Ted Gioka.
Welcome back to the Max Out Savings Show. So we're talking about, look, this is big changes happening. President Trump is making big changes. He's coming in there. He's cleaning house. Elon Musk made some comments. I think they're trying to remove $4 billion a day from the system and from government spending. And look, and this is real important. That they do this. And look, one of the things that you're not hearing a lot about out there, as we talked about, our debt is $36 trillion. We're borrowing money at the rate of about $1 trillion every 100 days. The debt goes up that much every 100 days. The Treasury has to refinance because of some shenanigans that Treasury Secretary Janet Yellen pushed to make all the borrowing short-term, double the amount of short-term borrowing. They have to refinance or borrow $7 trillion this year. Now, if they just kind of go with it the way it is, Trump makes basically some more tax cuts, spends a bunch more money, they're going to run out of money. Keep in mind the budget. We're at the budget limit right now, the borrowing limit right now. So they're using all their working capital to fund the government until they can get a new deal. But if they hit a wall and they can't borrow any more money, or the world thinks that just the spending is going to spiral out of control. Then you could see the dollar collapse. You could see interest rates skyrocket and people dump treasuries and cause a disaster. So President Trump has got to get in here, and they have to make changes very quickly to try to reduce this spending. And one of the way they're doing it is through the DOGE group, Department of Government Efficiency, where they're trying to cut back expenses. Now he's finding savings of about $4 billion a day right now. So they need to keep doing that to kind of build up to get, maybe to get a trillion or $750 billion of savings. So the world understands that, hey, we're not going to let this go on. Our money supply is up 42% since January of the start of the pandemic, the money supply. The government spending is up enormously. We had the government, the economy was shut down in 2020, so they had to come up with huge amounts of spending. Well, Biden got in there and said, look, why don't we just keep spending the money? We seem to have gotten away with it, and they just kept spending the money. So what's kind of happened is that we're headed. This thing is an out of control freight train going down the mountain, and unless they can, President Trump can find a way to slow it down, there's going to be a disaster. It's either going to end in a failed Treasury auction, skyrocketing rates, or they just start printing money and we end up in a hyperinflation. Either way it goes, it's going to be catastrophic. So this is why you're seeing him make these big moves and go in there and get serious things done. The DNI, which is for Tulsi Gabbard, which is your defense intelligence person, they work right with the president, kind of coordinate with all the defense agencies. When I heard about this, I kind of thought, well, there's, Tulsi Gabbard, she's going to have a staff of maybe 15, 20 people, and they're going to be monitoring the CIA and NSA and collecting data and working and integrating and reporting to the president. They've got like thousands of employees. I forgot the number, 1,500, 2,500 employees, and they had the ability to tax the CIA, and it was like its own little gigantic bureaucracy. It's just one. And so what Tulsi wants to do is she wants to go, look, let's just get all these people back to their agencies, cut people out, reduce the cost, and then the information will flow. We can get reliable information versus getting, nobody. The president gets, hey, what's going on in, what just happened over here? And he gets 3 different assessments from a bunch of agencies that have political agendas, and nobody knows what's going on. I mean, it's like this all over the government. So we're in a race. President Trump is in a race to try to get this under control and get confidence back in the government, this out of control freight train of spending, which could demolish the United States and utterly destroy your retirement. And this is why this is important. So he's moving quickly on this. A couple thoughts. Tariffs. Look, President Trump put 25% tariffs on the Mexicans and the Canadians and 10% on the Chinese. Wall Street's kind of like nothing to see here. He's gonna back. I don't think he's gonna back off as quickly as people think. If you look at Mexico, Mexico is just. It is one of the. They have a massive trade deficit with us. Let me see something. Let me see what their trade deficit is. Their trade deficit is, and stick with me here just a second. The balance. Okay, they have a trade deficit of $8.5 billion. It's up 50%. Okay, I'm sorry, 133 million. Yes, it's $8 billion trade deficit with us. We're getting 42% of our auto parts from Mexico. There's billions and billions of dollars of cash remuneration, Mexicans working, sending money back to the family into Mexico. The Mexican cartels are made billions of dollars flooding the country with illegal immigrants. They made billions of dollars flooding the company with fentanyl. Exactly why do we need to be nice? Mexico, it's been a one-way street with Mexico, and then they've been cozying up to the Chinese as well. And so President Trump is 2 things. Look, if you're sitting on our borders, you better be our friends or else. And we're not, the same thing with Panama. The Chinese are going to get kicked out of the Panama Canal one way or another. Either we take it over or they redo the thing. They made a deal to keep it in U.S. sphere of influence, and they didn't keep up with the deal. But a couple things. My point is Mexico is going to have to sit down and negotiate. But at the same time, we can't have countries around the world that have no minimum wage, that have no health care system, that have no pollution controls at all, and inefficient systems flooding the country with product, taking away American jobs. If you look at almost any product out there, the amount of pollution we put out is a fraction what it is if the same product is produced overseas. That's just pollution. We can go on and on. So So he said he's going to do something about that. Look what he did about the border and immigration. So he's going to straighten up this. We want the factories and the production back in the United States of America. Now, our wages are too high, but we can automate things. The second thing is what President Trump is realizing is he'd like to cut taxes for working people in this country. He'd like to increase the SALT deduction because people in the Northeast and California are just getting killed by these high real estate taxes. And he'd like to do some other things, maybe have a 100% depreciation on equipment for a factory so people get companies get big tax deductions for putting in factories, but he's got to have income. And we just talked about $1 trillion additional borrowing every 100 days. Our budget deficit, our total budget deficit was close to $2 trillion last year. This can't go on. But these tariffs could generate income coming in, which can offset some of this stuff and allow some of this stuff to do, and also create growth through new factories. That's what he's looking at. And the reason I'm telling you this is Wall Street's like, hey, these tariffs are nothing to see. The president's just going to eliminate. He's not going to eliminate all these tariffs. What did we say when we started to talk about Donald Trump? He's doing what he says he's going to do. Nobody thinks he's going to do that. I mean, there is so much graft and corruption. It was shocking. So wait, to finish this up, the tariffs. I expect the tariffs could be a bigger issue. We want to watch that. It could affect the markets. The other one, the Kennedy hearings were just real eye-openers. People I kind of respected, like Bernie Sanders. I don't agree with the guy's politics, but I always respected it, fighting for the little people. He was up there trashing Kennedy, and then it turns out he's one of the biggest, getting more drug money from the drug industry than almost any other senator. It was like these people are completely on the take. The U.S., in many cases, are paying 5 times to 10 times more for a drug than they are in Europe or elsewhere in the world for the same drugs. But to make matters worse, then the drug companies move over to Ireland and produce the drugs that we're paying 5 times as much as everyone else. They produce the drugs in Ireland because they have a lower tax rate or special tax things, and then they ship it back to the United States, and we have a further trade tax. I mean, everything about this is utter and complete insanity. But there's payoff. There's so much money. These drug companies get away with this because they're basically funding all these senators out there and congressmen, and so representatives. So. Kennedy's going to go in there and change things. Donald Trump is well aware of what the drug companies are going to do. There ought to be a tariff if it's a drug coming in from outside the United States. There ought to be a tariff on it, just to prevent this type of stuff. So all of these things are coming about. These are big changes for the drug companies, big changes for the auto companies, big changes for the food companies, with Make America Healthy Again. Big changes for a lot of companies out there. Big changes in government. They're going to give a pay package to everyone in the government. They think maybe 10% of the government people might leave. What's that going to do to employment and unemployment out there? And this is going to get rid of a lot of the dead wood in government. Look, you got to come back to work. The one industry where people were not going back to work was the U.S. government. I remember the guy that, you got to love Elon Musk. Everyone was like, we're not working, we can't, it's too dangerous to house. And Elon Musk, we're all working from home during the pandemic, and it's like the pandemic's kind of gone away, and they're all still working at home. And Elon Musk comes out and says, wait a minute, guys, we want our people back to work. He says, I got people on the factory floor. They got to be there every day. How come you rest of you people can't come back to work? And he really went right to the heart of the whole issue. There's a lot of people. If they're serving food, at a restaurant, they got to work. At the hospital, they got to work. At the factory, they got to work. These people all got to be on. They're out there working every day, and then 80% of the government is at home working remotely, and so again, big changes. So there's going to be a certain number of percentage. Unemployment is going to go up because of this. Some people are just going to leave their job. Maybe they're out in Colorado somewhere skiing every other day, and they work a half a day and report all their stuff in, and then from the ski slopes they ask for a few emails from when they're working for the government. That's not going to work anymore. So, but all these are really, really big changes. These are big things. And so this is going to, the question is, does this slow the economy down to some extent at the government level? I think it would. The freezing, the things we're hearing, some of these NGOs, they were giving billions and billions of the NGOs to sit there and help the illegal aliens get in here. I mean, it's truly extraordinary. But these are going to affect things. So anyway, big changes. Trump is the real deal. Understand that this is like China after the Cultural Revolution. Keep in mind, boomed. Okay, because it's like, wow, things are finally normal. You mean I can get off this farm and go work and build a company, or go work at a factory and make a bunch of money? Yeah, goodbye. See you later. And so the same thing is going to happen here. But this is, make no mistake about it, Trump's having to clean house from all these cultural revolutionaries in there. They got to clean them out. They got to get rid of them. If the people at the FBI were going around, everyone that was going after Donald Trump based on his political affiliation needs to be gone. Because if they go after Donald Trump because of his political affiliation, they'll go after you as well. And that's unacceptable. It was profoundly un-American. I mean, one reason governments typically in the United States, they change pretty easily, you don't have coups, is because we have fair elections. Now, hopefully they can also make it, Elon Musk, and I think this is true, they need to get rid of any electronic voting should be gone, because it's way too easy to hack an election. And I can tell you, if you look around the world where countries have used electronic voting, the voting has been suspect over the last 10 years. You can go look at the countries. You can look at Brazil. You can look at Venezuela. That happened. There's been a lot of them out there in places in the United States. So these are big changes that are happening. It's exciting. Now, a couple other things out of the government. Here's an interesting thing. State Farm, in March of 24, which is about a little less than a year ago, canceled thousands of policies in California. So look, we're not writing them; they're too dangerous, too much risk. Well, guess where they were the most aggressive at canceling policies? The Palisades area. That was the most aggressive area they canceled policies. Most of these houses are $2, $3, $4, $5, $6 million houses in there. All of California, the place they were the most aggressive was canceling policies in the Palisades area. Now you can go, wow, these State Farm people, they're a bunch of lowlifes. Well, it was really questionable why they did that. But this is the other question we have to ask ourselves. State Farm, these people are very smart. They looked at that, and what they saw was they had 2 years of record rain. There was a huge amount of brush built up around in the areas in California, and they knew typically after that a drought comes, and if the drought comes, you're going to get huge fire danger. And then they saw that the houses in there were very closely spaced together. Pacific Palisades, sometimes they're 20 feet apart, and they're very close. Typically a house is 30, 40 feet. These are 10, 15, 20 to 30 feet apart. So they're much closer together, and there was a real fire risk. So they decided, look, we can't take that risk. Now, I'm sure the insurance regulators in California called them up and said, why are you doing this? I'm sure State Farm said, look, do you realize the risk? These people, my point is, State Farm knew the risk. Why didn't the state of California go, what's going on with State Farm? Why are they doing this? Well, look, there's so much risk. If a fire gets out of here, it's going to cause billions of dollars worth of damage. And why didn't the state of California go, we didn't realize this. What can we do to possibly stop the fire? And they did absolutely nothing. So my point on bringing this up to you is not to criticize State Farm, which should be criticized to some extent, but to say, look, if State Farm clearly figured it out, because where they canceled most of the most aggressive percentage-wise was in Palisades area, which is where the fire struck. How did State Farms know there was going to be a fire there, and how did California have no clue and did not one single thing about it? And again, you got to look at these trends. You got to understand things. But again, this is incompetence in government. This is diversity, equity, inclusion. This is not paying attention to taking care of the people, doing what's right for the United States, what's right for the people of California, instead of, watching out for the spotted salamander or something and endangering a good portion of Los Angeles. They're not paying attention. So, but this again, I want you to understand this is all changing. If you think it's going to go back to business in California, I'd be shocked. As cynical as I am, you're going to see big changes there. So again, out of control spending, government that doesn't know what it's doing, big issues, and these are all causing problems. And now we're trying to straighten all these out. This is great news. This is good, but this is going to cause problems with the economy. What type of deal are we going to get before the budget problem in March, April timeframe with the end of the debt limit? We totally run out of money. Can they get a deal done? Is inflation over? All these. What are the tariffs going to do? The tariffs are going to be there. You can bet on it. They're not going to be as easy as people think, because Trump's got to stand up and set an example. And this is all going to be disruptive. And we'll be right back to talk some more about this right after this right here on the Max Out Savings Show.
If you've got savings and investment questions, Ted Gioka has answers. Call the Max Out Savings Show now at 713-339-1070. We'll be right back.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
In the 1970s, the big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
Hey everybody, Charlie Kirk here. Ted Gioka, the founder of Max Out Savings Advisors, always says, save aggressively and invest conservatively. He specializes in helping people grow their retirement account with as little risks as possible. Ted combines working knowledge with the intuition gained from over 25 years of experience of value investing in the stock and bond markets for retirement accounts. Like you, Ted is deeply conservative in life and in his investment approach. His risk strategy allows him to anticipate market downswings to protect your money. Ted is also the conservative host of the Max Out Savings Show. You can listen to him every Saturday morning at 10 a.m. right here on The Answer. If the idea of saving aggressively and investing conservatively appeals to you, the best way to get to know Ted is to call him. The number is 713-627-0400 or visit maxoutsavings.com. That is maxoutsavings.com. Call Ted right now, 713-627-0400 or visit maxoutsavings.com.
And now, more of the Max Out Savings Show with Ted Gioka.
Welcome back to the Max Out Savings Show. We're just talking about some of the big issues that are happening in the world today. We got a new president coming up. It's big changes are happening in the world. We're getting rid of the diversity, equity, inclusion culture, which we said is very similar to the Cultural Revolution in China. We're going back to common sense governance. And Donald Trump seems very serious about making these changes and getting something done. And so you're going to see it. And this is why we think he's going to have the tariffs. He's shut down the border. Friday, a couple of the head of I think security, or the head of the border and stuff of Canada came down and met with the president's team. I mean, they are very serious about getting things done. They're not messing around, and really, interestingly enough, I mean, I think they got a completely different Donald Trump. If Donald Trump would have won like against Joe Biden, I don't think he would have done what he did. And in a way, it's actually worked out for the better because everybody has seen what a disaster these policies are, and there's big changes coming. So anyway, that's what we're looking at here. And so looking at these markets, the market actually, since the election, it's about the same place. It's up just a little bit from the election, and I think I think they're starting to worry a little bit about what's coming up with some of these deals, how these layoffs in the government are going to affect things, and what's going to happen. And so I think you're going to see. I don't see you're going to see a big year this year. I think you're going to see a volatile year in the markets. Interestingly, one of the areas that's doing very well this year is really the gold in the silver sector. The precious metals has done remarkably well. Gold hit 28.50, and it's up 7%. Since the start of the year, gold's up 7%. Again, it's the best performer this year. We've been talking about this, and up 194%, up 107.35%. And I think it's pretty high up here. I think probably there's going to be some catch up with the stocks themselves. Silver, same thing. Silver's up 10%, up $3. Silver had a little bit of a sell-off. I still think silver is lagging. I think silver really should be closer to $40. I think silver could be one of probably the top performers this year in the markets. And again, what is going on? There seems to be a lot of buying out of from central banks, particularly out of China, and it's been just an enormous amount of buying of the gold. Silver's actually lagged because I don't think China is buying as much gold. The thing that's hard to tell is this the Chinese central bank or is this Chinese investors? They're like, hey, I'm losing money in real estate, I'm losing money in stocks and bonds, but this gold seems to be working. The Chinese are big trend followers overall. The other interesting thing in the precious metals, there's massive amounts of exercising of the delivery on the commodity contracts where people had delivery. They're delivering to the warehouses the actual silver and gold into the United States. There's actually been an arbitrage, and they're not sure if for the European market, is there an arbitrage or is there massive amounts of gold and silver coming back because they're worried about tariffs? People aren't sure what's going on here, but there's an enormous amount of physical gold and silver being delivered into these contracts right now, and I think this is something we want to watch closely. It could be they're trying to stop J.P. Morgan could be trying to stop the move up in the precious metals. I'm not real sure yet on what's going on there, but the sector continues to look good because so much of the world, the debt in the world is just out of control. The Japanese have materially more debt than us. The Chinese are in deflation. They're going to have to try to grow their money supply. The Europeans are just a complete. If you look anywhere in the world, the Europeans are a complete basket case, and it's really fascinating because that's where Davos really got control of the government. The Global Economic Forum people got control of the governments, and since then it's been straight down. As far as economic growth, standard of living, massive immigration, just disastrous, lawlessness is out of control. It's kind of the United States squared, as far as just things going badly. But and so the question is, do one of these currencies around the world destabilize? As much as we think the dollar's going down, it's kind of the dirtiest shirt in the laundry, so to speak, or the cleanest shirt in the laundry, or the best house in a really bad neighborhood. I mean, it's just all these people are in trouble, and their first inclination on all of them is just to print money, and this is why we in a world of out of control debt growth, $1 trillion every 30 days in the United States. Other countries are worse. the propensity of central banks to print money, out of control government spending globally, with AI now, and with all this massive trading and stock trading and different things, and these derivatives programs, the physical gold and the silver is increasingly, even with Bitcoin, because it's the one thing that nobody can kind of take. If it's there, it can't vanish. It can't, if the electricity doesn't work, you can't print gold and silver. And so this is what we're kind of watching. And I do think that this inflation is still continuing to come up. The PCE came out. It was still high. This inflation is still out there, probably running 3.5%, which is still very high. And keep in mind, your Social Security, you only got a 2.5% growth in your Social Security check this year. And so, Social Security, all these fixed incomes are still lagging. If you're seeing, if the inflation is running about 3.5%, the real number is probably 5 if you run the numbers. It could be more than that if you go look at the store, anything you do, because they've done so many ways to kind of hide the inflation in government statistics. So we think this is going to continue to be the way to do. You want to steal shorter-term bonds till we get a really idea of what's going to happen. In some of these things, if you look at when the market had a sell-off here about a week or so back, some of the food stocks really took off and ran. We moved into the sector a little ahead of that, and you could really see the minute the market was off, 500 points or something, all of a sudden those things shot up like a rocket, and I think that's going to see. And the other thing I want to cover, too, is we talked about DeepSeek last weekend on the Max Out Savings Show. Most of y'all hadn't heard of it. We said this is a huge game changer. And then the market just fell apart at the beginning of the week when this news came out. At one time, I think the NASDAQ was down close to 1,000 points, and it rallied back. And it's still, the Chinese seem to be able to do things much cheaper. If it costs $5 million to build out like a ChatGPT, their system, they're claiming they were able to do it for $5 million. I don't think that's right. But there's a pretty big. That's 1/100 of what the other people are doing. If they can do it at 1/10 of the cost, it's a big deal. But why that's important is the Chinese have shown that anybody can have a chatbot, or not anybody, but what the model was going to be was, look, these chatbots are so expensive that the only people that can afford it is Microsoft, Google, Meta, Tesla. You have to be $1 trillion company to do this type of stuff. So there's going to be kind of an oligopoly of chatbots out there of artificial AI that you'll have to kind of pay to get into. Well, if all these other people could do it cheaply like this, it throws their whole model into question. To give you an example, NVIDIA fell $560 million in one day, the valuation. And to put that in perspective, $590 billion in one day. That's the value of the stock fell, $590 billion in one day. That exceeded the total valuation of Exxon Corporation. Think about that. The largest oil company in the world out of Saudi Aramco, and the total valuation vanished in NVIDIA. These stocks are extraordinarily expensive still. I still think these big magnificent seven, I think they're overpriced. I think you stay away from them. I think they're going to continue to have issues. We saw Apple come out. Apple said, well, yeah, things are slowing down in China some, but that's just because China doesn't have AI on their thing. Everyone's buying the Apple 16 phone here, and it's all great, and the stock sold off, and then it went up, and the next day it went up like 10 points in the morning. Everyone trusted Apple. Tim Cook, and all of a sudden it reversed and went down 3 points. And that's a very bad reversal on Apple. And that's telling you that for all the happy talk, people are looking at this and going, wait a minute, the Apple 16 isn't that great. It's not much different from Apple 15. What's going on? You guys seem to be doing all types of stuff, and now they're trying to get me to sign up for Apple News, Apple this on the systems, and I got all this garbage on my Apple phone. I was just talking to someone about trading out my MacBook Air for our tech guys with the Microsoft, because I'm kind of tired of having to get tied in all over the place with Apple. And But this was a bad reversal on Apple, which was the most valuable company, at the beginning of the year, I believe. I think it's between them and NVIDIA. And NVIDIA was lower, so I think Apple's still the most. But this is a bad reversal. Microsoft reported so-so earnings. That stock is sold off. I think these big tech companies are going to start pulling back. I would avoid the sector. Again, I think you have to have, as we talked about in the show, in this environment, there's enormous potential outcomes. I can make very good cases, and I think this show has probably done better than anybody in Houston on the radio of predicting, of kind of saying, look, this is what we think could happen out in the future. We did it with the crash of 08, and we said it in 07, and we told you exactly what was going to happen with the war in Russia, with Ukraine. We said this is going to go on. It didn't went longer than I thought, but I said this is going to be inflationary. It was. We laid out all the products that were produced there, and how much it was going to cost. At the end of January 2020, we said this COVID virus is a big thing. You better watch out. You better reduce exposure. No one, and people, all my doctor friends are like, Ted, there's nothing to see here. I'm like, well, that's not what we're seeing. We looked at the research in London on it, and we look what was happening in China. So I think we've got a pretty good record. Right now, there's a lot of potential outcomes. And so in that multiple outcome world, you want to own stocks, bonds, shorter term bonds, because we live in an inflationary world. We have wars. We have a change coming up. You want to own stocks, bonds. You want to own shorter term treasuries. You want to own commodities. You want to own different things for multiple potential outcomes, and you want to have higher levels of cash. And I think that strategy will continue to work going forward because we're coming up on big changes this year, and you have to be prepared for them. A couple thoughts here. If you need some help, we can help you. That's what we do. We manage assets at Max Out Savings Advisors. We're value investors in the stock and bond. We hold our assets at Charles Schwab. If you need some help, we can help you out. We design portfolios to kind of get through these type of big issues and protect your retirement. Just go to our website, maxoutsavings.com, and request an appointment. I'd like to help you out if I can, and it's a free consultation. Also, sign up for our free newsletter. It's maxoutsavings.com, and just go there and request the newsletter. That's another way we can help you. We have a lot of stuff to help you out. You can catch the podcasts and different things as well. It's maxoutsavings.com. And more our motto and philosophy, which is to save aggressively and invest conservatively. That, my friends, is the key to building up wealth over the long term. Save aggressively, invest conservatively. You want to take charge of your retirement. You want to protect yourself in a very uncertain world. Things are getting better. Donald Trump's in there. These are big changes happening, and you want to navigate through it. So if you need some help, let us know. Go to maxoutsavings.com, and I hope everyone has a great weekend.
This has been the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka on AM 1070. The Answer.